Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and U.S. economy space. And as you guys can tell from today's title, we'll be going over Coinbase's earnings, Polygon cut back some of its workforce, as well as China's Bitcoin market and how it kind of correlates to their stock market. So if you guys enjoyed today's video, go ahead and drop a like below. And if you want to stay up to date with all of my most recent videos, go ahead and subscribe. Let's go ahead and jump into CoinMarketCap because you know this is my one-stop shop for everything. I love starting here before I do any Bitcoin research. And as you guys can tell, we are coming in at 1,088 billion, and Bitcoin's dominance is still rising slowly but surely, and it's coming in at 42.4 on CoinMarketCap. And if you just go ahead and look at some of the prices here, we are kind of staying stagnant this week. Bitcoin's been butting its head up against that $25,000 range. Not sure what it really wants to do, if it wants to break through it or not. Seems like almost everyone is calling for it to break through it on Twitter, but Bitcoin still hasn't made up its mind. You have Ethereum coming in at 1,640, BNB coming in at $312, Cardano at $38, as well as Polygon coming in at $1.40. So let's go ahead and go to the charts real quick because I want to show you some important things before we go and dive into the Coinbase earnings. And let's start with just the Bitcoin chart because I do want to pull some sentiment, some social sentiment out, because Bitcoin currently just is kind of reminding me of how we were back when we were at 15.5. Everyone was calling for us to go to 13,000. And it just seems every post on Twitter, you're scrolling, it's someone calling for 13,000. They're just saying they're starting their DCAing, looking to let their entire bag go at 13. And ultimately what happened when everyone was calling for that? Well, Bitcoin shot right up to where we are today. And we see ourselves kind of getting into that same narrative, except this time it's almost everyone's calling for Bitcoin to break through that $25,000 range, 25,002 range. So people have been showing y'all this, I'm sure, throughout the entire week. I'm sure you've heard multiple people talk about the ascending triangle, and ultimately we did finally break through that pattern downwards. I wanted to highlight this for y'all because typically whenever Bitcoin has everyone calling for it to do one thing, Bitcoin tends to do the opposite. And as you can see here, we are actually breaking downwards. But as we are breaking downwards and we're losing some price out of that trend, you can see here that the Bitcoin dominance is still kind of ineffective. We're still in that trending range, and we are still retesting that 45%. I think once we can get above the 45% in Bitcoin dominance, I think that's when we'll finally break through that $25,000 range, because I still think what people are doing is they're getting these profits from Bitcoin that just had this amazing run up, and now you see the influx kind of going into altcoins with some of those of having their pumps the last week. Because if you go back to CoinMarketCap, just in the last 7 days, you've seen just alts are pumping. And we will go into certain alts that are pumping because it will be tied into that Polygon news. Because you notice a certain industry, a certain category is kind of pumping more than others. And I think that could be something to show for the future. But let's go ahead and jump into that Coinbase earnings now that you kind of know the social sentiment behind of where my head's at. And as you guys can see, Coinbase beats the revenue and earnings that they anticipated, as well as their usage still continues to decline. So I think this could actually be bullish news that their usage is declining. I think that could potentially mean that people are finally understanding that centralized exchanges are bad. They're finally moving to those decentralized exchanges. They're taking custody of their own funds. They finally realized with Three Arrows Capital, Celsius, FTX, there are these bad actors in the space, and people just can't trust the institutions to handle their money. I do also think it could be a negative, a bearish indicator, because it could also mean a lot of people are still feeling the pain of the FTX, Celsius, BlockFi, Three Arrows. They still have some distrust, untrustworthy opinions or feelings towards the space, so they are still hesitant to get in. I think this could be a negative for that on ramp and just getting the more adoption going, but it could potentially be a good source and sign to come, because the whole point of crypto and the digital assets is the decentralization, to make sure there are no bad actors, to make sure you have control of your own funds rather than some of these centralized exchanges. Now, I don't want y'all to think that I am against Coinbase at all. I still do use them to buy some of my coins, but it is just important to note that some of these people might not return to the space, as well as they might just actually be learning how to custody their own coins. So it's kind of that give and take battle of not sure which way this could lean, but it is important to know for the space, as well as you can see here, their earnings and revenue, it didn't go up, it is still declining, and you can see here their revenue declined by 75%. So I do know that they are testing some different ways of making money, like a subscription-based platform instead of just their trading fees, so that could be a reason for it, but I, I thought it was important just to show this article to y'all for that reason, because their trading volume fell 9%, as well as it just looks like people are leaving decentralized exchanges. So I hope they're going to DEXs and they're not just leaving the space, but this could be a bad sign to come. Now let's just go ahead and jump to the Polygon Lab story, because as you can see here, they cut 20% of their workforce. So we did see a Polygon pullback because of that. Now, during the bull run, you did see a lot of these companies just kind of go foot to the pedal to the metal. They're hiring everything. They're trying to get as much growth. So the pullbacks could be because of this. I don't think Polygon is a bad project by any means. I think they'll be going forward. They'll be doing good things going forward. I just think that it's important to pay attention to the projects in the space and what they're doing with their workforce, because it does look like they're just trying to cut their funds due to the Fed tightening, which is why I told y'all it's important to pay attention to the Fed rate, because it does affect everything. And why is it important also to realize what's going on with Polygon? Well, because as you can see here, they're partnered with a lot of big name companies. So it's important that we do pay attention to some of those top 10 coins like Polygon, because Polygon is a layer 2 that is built on Ethereum, and essentially their goal is to make Ethereum's blockchain quicker and easier to use through going through Matic. And as you can see here with all of these, they're focusing in that NFT space, and I think this could be one of the bigger markets to come for this bull run. I think Web3 NFT could be the catalyst, the biggest gainers. Also, you can just see this through what's going on by category. NFT marketplaces is the highest through the 7 days, while Bitcoin is still trending down, and some of these other coins are trending down. And of course, they're all green, but 0.1%. It was just red 0.1% as well. So those bounce between each other, but as you can see, we're up 33%, which is a huge gain. Also, you can just see here with Web3, gambling's on Web3, 15%. You have Internets of Things, Internet Computer System, that's the Web3 as well. You see these Web3 AI NFT spaces are really blowing up, and I think this could be what gets a lot more adoption going back to the Coinbase argument. I think with companies like Adidas, Starbucks, Adobe, Meta, they're using blockchain technology to release some of these NFT products. I think it will kind of get to the point to where people are using Web3 and this technology without even understanding that they're using it. So, to close out in the last story of the day, as y'all can see here, Beijing is quietly backing Hong Kong's move to become a huge crypto, Bitcoin, Ethereum hub of East Asia. Now, if y'all remember, around the top of the market, I would say roughly in not December, about November-ish, October, China banned Bitcoin mining and Bitcoin in its country. So around right here, they decided to ban it. Now you can see that they're silently supporting it as the bull market starts to go again. And it kind of sparks my interest on why this would be the case, because you can see here, Bitcoin is becoming increasingly correlated with the Chinese stock market, which is interesting because if they banned it, how is it correlating so well with their market? You can see it's having peaks around the same points. It's having dips around the same time frame. So I thought this would be important to highlight because it looks like it is starting to separate from the Dixie and move more towards, Bitcoin and Chinese stock market. So that's all I had for y'all today. If you guys did enjoy today's content, go ahead and drop a like below. And go ahead and subscribe. That way you can stay up to date with all of my most recent content. But I hope y'all stay safe out there. Bye-bye.